However, we need goodwill in determining the total assets. So you are going to add goodwill among the assets in arriving at the total assets. So you add 9,000 for your goodwill. That's the difference between the goodwill of 12,000 and the share of the parent in the impairment loss, amounting to 3,000. See, the goodwill is 9,000. Now, how much is the total assets? How much is the total assets? Will you try to determine the total assets? Okay? Total assets? Give me the amount of total assets. Okay? Who is ready with the total assets? Okay?
Huh?
Yes. How much?
1,779,000.
Okay. So 1,779,000. 1,779,000. By the way, there is one item here that we have to consider, your discount. Discount on bonds payable. You will notice that in our analysis in letter B above, one of the items with an adjustment is bonds payable. The amount of the amount under stated was 4,800. And so if we have to deal with the annual amount is 1,200. So for the current year, we have 1,200. Now we know that discount on bonds payable is a debit. How do we treat discount on bonds payable? Okay? How do you treat discount on bonds payable? Do you have the treatment as stated in the book? How do we treat discount on bonds payable? Actually, it's a debit. So by the time you adjust at the end of the year, you keep on crediting discount on bonds payable. And your debit is to interest expense. Now, at the end of the life of the bonds, that discount on bonds payable account will have a zero balance. In other words, you have fully amortized the discount on bonds payable. Okay, but my question is, the discount on bonds payable account being a debit balance, how do you treat it in the books? How do you treat it? Anybody who is discount on bonds payable? Anybody? Discount on bonds payable. How do you treat it in the books? Your discount on bonds payable. Normally, it's a debit. How do you treat it in the books?
Deduction.
Okay, anybody who knows? Discount on bonds payable.
Deduction from bonds payable amount.
Deduction from
Bonds
bonds payable. Normally, bonds payable is a credit. Now, if it is a debit, no? Meaning you deduct it from bonds payable. On the other hand, your premium is a credit. So you have to add it to bonds payable through your periodic amortization. So if you have your discount on bonds payable, your entry every year will be to debit interest, expense, and a credit to discount on bonds payable. Okay? Can we not treat discount on bonds payable among the assets? Do we have an alternative of treating discount on bonds payable among the assets? Can you discount on bonds payable? Can you treat it among the assets? Then, how are you going to? Or it's really to deduct it from bonds payable. Now, if the total assets is 1,779,000, can you make the tally with the total of the liabilities and shareholders' equity? Let's now go to total liabilities and shareholders' equity. Okay, start. Accounts payable, we now have 120 and 120. So accounts payable is 240. Bonds payable, 240 and 120 is 360,000. But we are going to deduct 3,600. Where did we get 3,600? You go back to 1B above. We have the amount to bonds payable. The under applied is 4,800. The annual amount is 1,200. So charge against 20x4 is 1,200. In other words, if the discount is 4,800, we deduct 1,200, the net amount is 3,600. That is the discount on bonds payable. That we have to deduct from bonds payable. Are you following? So bonds payable, 360,000. Then deduct discount of 3,600. And you get the total liabilities. That's 596,400. Because you have 600,000 minus 3,600. So you have 596,400. Now we go to the common stock of the parent. Normally, we only consider the common stock, no, of the parent. Given in the trial balance is the common stock of the parent amounting to 600,000. The common stock of the parent is 600,000. Now we go to the retained earnings. The retained earnings of the parent initially was in the amount of parent 360,000. That's the original retained earnings of the parent for retained earnings of 360,000. Now, what is the final amount of retained earnings after the parent receives its share in the profits of the um, subsidiary? The initial amount of retained earnings was 360,000. Now, how much was the share of the parent in the earnings of the subsidiary. So, we finally determine the amount of retained earnings at the end. How much is the retained earnings at the end of the period after adjustment? When the beginning is only for 360,000. How do you find now the addition to your retained earnings account? Okay? So that's the missing item there. Okay. I'll give you the figure, determine how it was arrived at. Retained earnings accumulated. P&L is 490,440. 490,440. 490,490. Now, actually, you try to look for the breakdown of that. Then we are now through with letter N. We go to letter N. How much is the amount of sales? Sales, 720,000. Sales, 720,000. The sum of 480 and 240. Then we have cost of goods sold. The sum of 204 and 138 and 6. 204, 138, and 6. So that's equal to 348,000. The gross profit is the difference between 720,000 and 348,000. So the gross profit is 372,000. Now, I hope you are filling up the blanks. Do you fill up the blanks? Everybody? Do you fill up the blanks?
Yes, ma'am.
O, sige. So, the gross profit is 372,000. Then, we are going to deduct the expenses. Now, what is the total of your expenses? Okay. Expenses total. Here, we have including your goodwill impairment. Including your goodwill impairment. Now, for expenses, we have the total of 84,000 for depreciation. We have the total of 84,000 for depreciation of the two companies. Then we have the total of other expenses in the amount of 66,000. So, how much is that already? 84,000 plus 66,000 is 150,000. And then we are going to add goodwill impairment. The share of the parent is 3,000. The share of the parent is 3,000. Okay? So we now get the total of 153,000. 153,000. Okay? And then we add one more expense for the total of 7,200. For 7,200. How did we get 7,200? Okay? Here we have for your buildings deduction at net of 6,000 and the interest expense on your discount on bonds payable and the interest expense on your discount on bonds payable. So we now get the total of 7,200. 7,200. Okay. So how much is your total expenses? Your total expenses is 160,200. Your total expenses is 160,200. Okay? So after the total expenses, what do you need to determine next? What do you need to determine next after your total expenses? You are now going to determine the next item there is your controlling interest in net income. Controlling interest in net income. How much is the controlling interest in net income? So, we have the difference of 202,440. 202,440. And how do we get this amount? Now, let's try to clarify again on your sales. Okay? Let's do it over. Sales, 720,000. Then we deduct cost of sales, 348,000. Then we are going to deduct your depreciation with the amount of 90,000. That's the adjusted amount. Initially, it was 84. 84, you add 6. So that's 90,000. Then we have the amortization of the interest expense equal to 1,200. We have the other expenses in the amount of 66,000. And finally, the goodwill impairment loss of 3,000. So our total there is 508,200 deducted from 720,000 supposed to be, no? But what we have in our analysis, we have added in our expenses, we have added 90,000 or 84 plus 66 plus 3 plus 7,200, no? But that already includes 6,000. Now, will you please add your total expenses? Please add your total expenses. How much? What I have given, please add your total expenses. How much? Is 160,200 correct? Hello?
Yes, ma'am.
Pila ang inyong nga total expenses? Pila? 160,000. 160,200. Is that correct? Oh, So
Yes,
what will be your net income? How much is the net income of the company? How much is the net income of the company? So if you have your gross profit of 372,000, that's the amount of gross profit. Is that correct? Then we deduct from the amount of gross profit of 372,000, we are going to deduct 160,200. So 372,000 minus 160,200, the actual amount of net profit of the subsidiary is 211,800. So you have that in letter U. Net income or the consolidated net income, 211,800 in letter U. In letter S, the controlling interest in net income is 202,440. 202,440. That's the controlling interest in net income. So the balance goes to the non-controlling interest. The non-controlling interest, that's 9,360. 9,360. That's the amount of non-controlling interest. So 9,360. If you add 9,360 and 202,440, you get 211,800. You get 211,800. How did we get the the non-controlling interest share in the net income? How did we get the non-controlling interest share in the net income? Okay, let's compute for that. The net income of S company. The net income of S company is 60,000. 60,000. Then from that net income of S company, we are going to deduct the amortization of allocated excess and the goodwill impairment. Actually, we have already computed in letter B the amount of 13,200. The amount of 13,200. Okay? So from 60,000, the net income, we are going to deduct 13,200. 13,200. We now have the difference of 46,800. 46,800, you multiply by 20%. So you get 9,360. 9,360. That's the amount of the share of the non-controlling interest in the net income of the subsidiary. Okay, so let's go back to we already filled up letter U, 211,800. And we fill up letter T, 9,360. And so the difference between 211,800 and 9,360, that's the controlling interest in net income, 202,440. Okay? So we finally go to letter V, common stock, ordinary share for 600,000. That's the parents. Then we add retained earnings, 490,440. Retained earnings of the parent initially was for the amount of 360,000. The retained earnings of the parent. Now we already have 490,440. The controlling interest, equity holders of parent, we now get the total, add 600,000 and 490,440. So 600,000 plus 490,440. So we now get 1,090,440. 1,090,440. Then the non-controlling interest is 92,160. 92,160. That's your non-controlling interest. And we still have a continuation. On the other side, stockholders' equity, what's the total? And liabilities and stockholders' equity. Now we have to understand that we have 1,779,000. That's the amount of assets. So it must be the amount of liabilities and stockholders' equity. Okay. So what are the items that you need to compute? I assigned this to the other class. So compute for stockholders' equity. And so you have to get your liabilities and stockholders' equity. You have to compute for 490,440. For that purpose, that's your amount of retained earnings. And your assignment for next meeting, that will be tomorrow. Your assignment will be to complete the second column. You have a little difference. Complete the second column under the full goodwill. Compute for all the accounts here. And you work on the remaining requirements. We have a lot of remaining requirements. And I hope we can finish all of this by tomorrow. The last part is the worksheet. So that by Friday, we can take up another problem or the multiple choice problems. The test on Monday will include modules 1 to 6 only. Okay? So anyway, whatever we can finish up to Friday, that will be the coverage of our exam on Monday. Okay? So, see you tomorrow. I have to involve very, very long problem solving by tomorrow. Okay? So, please, I do not know how you will do it. I have to record your scores. So, what do you think is the best way of giving me your score? So, my cell phone, kung tama, gid ka damo-damo, daw budlay na, no? But anyway, pwede man nga one text message, you can record several. Okay? O, sige.